Hey, welcome to the Closing Beat, everybody. Happy Wednesday, Fed Decision Day Wednesday. Hope you're having a good day here today. This is just a quick show that we do, stock market update we call it, to go over the good, the bad, and the ugly, or the headline news of the day. And if you've been following us for a couple weeks now, we've been talking about the Fed rate decision. Well, that's out today. We'll cover all that geeky stuff as we go here. Also, we're playing a game. Bottom right-hand corner of your page or screen there, you see you can go guess the Dow. It's just a fun game. Go guess the Dow. Where do you think the Dow will finish next week? And if you're the closest without going over, then we'll send you $100. Simple as that. There's no spam marketing or anything like that. It's just a fun game. We really have no other intentions with it. And if you're one of our customers, we can actually credit your account the $100 if you prefer, and or we can send you a gift card. Whatever you like, you can go take your guess there at jazzwealth.com/guess the Dow. Tomorrow, we have our class for customers. We're doing our portfolio update, let you know all the things that we did throughout the month of July here. On our website, you could see our portfolios. Just think of them as little mutual funds that we don't offer to the public. And so we adjust them over time, and there's different things we need to do along the way. And so we'll go through and, of course, update you on that tomorrow. Invites will go out tomorrow. And then we always cover some cool stuff, some interesting stats, geeky things for the month going forward, so that our customers know what to expect, right? Should you be a little bit worried about August? Does it tend to be a little bit sloppy? Does it tend to be really strong? What are the stats behind it? We'll kind of update you on that, hopefully as quick as possible. And a big thank you to all of you that watch us on YouTube. I actually didn't notice. A customer actually left a comment, Mr. Keith. He left a comment that we hit 50,000 subscribers. I didn't even notice. So thank you for all the support there. It goes by quick. I mean, I totally, didn't expect it, but I appreciate all the support. Thank you guys for watching. All right, enough of the homework. Let's dive in here. We really could pretty much just talk the Fed the whole time if you want. I've got a lot of stuff to cover, as always. But we got to hit the Fed here. So the Dow, you might notice, down 300 points. The S&P down 32. NASDAQ down 98 points. And a lot of that coming in the latter part of the day. The markets were pretty quiet leading up to the Fed announcement, and then boom, big excitement there. They did cut rates by a quarter point. That's the first time they've cut rates in 10.5 years. We've covered that over the last few days. The statistics we've covered also have remained intact. So a lot of people think, why are you looking back in time to see what happens? Well, because it provides a great insight as to what to expect. So when I can, I like to share some stats with you that we spend a lot of money on here and see if that helps you. So here's the thing. We've been saying, is the Fed cut priced in? For weeks now, people have been going, all right, 25 basis point cut, right? And the markets have been trending higher. So a little bit of hint today with the markets falling. I'll go over to the charts here. You can see the S&P 500. A little bit of sort of hint leading up to it that, there was a little bit priced in, right? And people just wanted to take their profit in the short term. But a lot of it has to do with the algorithms. And the algorithms had no idea what to do today. Mr. Jerome Powell, who's the Fed president, is really bad at keeping a clear, consistent message. Not that I'm any good at it, I'll be the first to admit that, but he's really bad at this, so much so that the market doesn't perform very well when he is speaking. We'll talk about that in a second. But you have basically the computer algorithms here around 2 o'clock, and then when he started his press conference, they digest every single word that he says. They really do. And to make it super simple, the way most of these things work is they assign either a positive or negative number to different words and different comments. And the more words that are said in one category skews the overall sum of those numbers into a positive or a negative, and they make these calculations in really quick time, and that tells the system whether they want to buy or sell. Don't ask me how I know that. So that's basically what happens. Now, when the algorithms are trying to figure out the statement, the prepared written statement versus what the man is saying and the questions he's answering, usually there's a cohesive sort of mix there. Like what's in the statement is exactly what he's saying. He's just confirming it and everything's good. We didn't have that today. We had a lot of this sort of what the statement said and what he's saying all of a sudden seemed to be walked back. At one point, he said that he was going to, this was the one and only cut. This was it. We have no plans to do future cuts. And then it was almost like a little buzzer went off in his pocket that lets him know the markets are falling really fast, because then he sort of changed his tune, right? Well, that leads to confusion. And anytime we talk here about stocks or the performance of any stock, we always say that when people are confused or when people are uncertain, then the stock price tends to be rather wild. Well, the stock market and investors in the market today were rather uncertain based on what he was saying. So you have this volatility, and most of it coming from, of course, the algorithms, because most of us didn't do anything today. Right? It's not like you're going to adjust your portfolio based on what happened in a little 5-minute time period. So that's all computer driven. Because of that, you have the S&P lower, breaking through the 20-day moving average, officially closing below that. You have the Dow lower on the day, doing the exact same thing. Notice where the two sectors here, the two indices stopped for the day. So they came down. I'll use this little hidden thing here on our dojo charts. Notice they stopped right at the first known technical support area. Click. There you go. So that's where the Dow decided to stop on the day. Totally cool, totally expected by technical traders, and totally welcome, I believe, by the bulls. And you had the same thing on the S&P 500. I probably don't need to draw it, but you can see the same thing right at that 295 number. So you've got short-term support, really short-term support here off that was proven to sort of show itself today. So there's a little bit of hint there with the overall stock market. And then the NASDAQ broke through. It's a little bit weaker on the day, not a big deal. The big issue here with the Fed today, by the way, the Fed, their own words is that they are data-driven. I'm a data-driven guy, but they profess to be a data-driven Fed. Well, today their comments didn't have anything really to do with data. Inflation, I get it, they mentioned that in there, but they just sort of cut rates, right? And they just, well, it's like a mid-cycle cut, right? Okay, but where's the data? Give me the data. We've been pointing out all of this economic news that's been really good over the past few weeks here. Even today, you had ADP employment numbers came out better than expected, 156,000 versus 150,000. So everything seems really good. They needed to give a reason, data-wise, why they needed to cut rates. The problem is they didn't do that. And so now they're perceived, or Mr. Powell is perceived as being pushed around a little bit by the president. The president already tweeted that the Fed's let them down. Even though they cut rates, he said, the Fed let us down by cutting only a quarter point. So he's being sort of bullied over here, and he seems to be reacting to that by being accommodative. That's tough. Not only that, in his press conference, if you didn't watch it, he's a pretty likable guy. He's pretty laid back. He doesn't get very agitated. He's usually very flat, and sometimes he'll even sneak a smile in there. But today he got agitated, very frustrated, when people were asking, or the reporters in the room, why are you cutting rates? We don't understand, right? Like, give us some data. He got pretty frustrated with them, and you usually don't see that. So another sign of somebody that's being pushed around a little bit there. I don't know. I mean, I'm just sort of voicing my opinion there. I'm not sure. Meanwhile, let's move on. Well, here, I'll cover those stats for you real quick. So we talked about this yesterday. The last 10 rate announcements by the Fed have returned an average of a negative 0.25% to the downside for the S&P 500. We now have more negative Fed days for Mr. Jerome Powell than any other Fed president. I think he's only had 3 in total. He's had 3 positive days. The last one was in January. It was a good one. The Dow and everything was up 400 plus points. But for the most part, now we can safely say, okay, when he talks and gives his sort of rate announcements on Fed Day, average is a negative 0.25% decline. That's not good, right? That lets you know, it should let the Fed know, hey man, we need to tighten up your speech here a little bit and get you sort of on track there. All right, other things I want to cover here today. China, the trade talks with China, they officially ended today, and it just ended, right? They were done negotiating. All of our delegates are coming back. It was sort of like they went there on vacation. There was no comments, really. The only comments were like, we're making progress and blah, blah, blah. But nothing got done, so we didn't get any update there. How awesome was that this happened on a day when we were all looking over here? What's the Fed doing? Wait, who's in China, right? We didn't even notice this. So I think that would have been a negative sort of move on the markets today as well, because they didn't get anything done, right? Normally we were like, hey, do we have a deal? Like, is something going to happen? There was no talk at all. The next time they meet is in September. I believe the Chinese are coming over here to continue talks. No talks about the agriculture. There's issues there. Are they buying the agriculture? Are they even starting to buy it? The assumption is no. Soybeans lost another 2% today. If you happen to follow that, they were a little bit weak yesterday. So crazy there. Anyways, bottom line here in the stock market, did anything change overnight? Did we really learn anything, get anything new, find any new reason why the market should go higher or lower? Nothing. We got nothing, which means we turn back to earnings. We turn back to trade, and this trade thing may come up in the news tomorrow because everybody was focused on other stuff today. So the S&P 500 just floating a little bit lower. In the short term, more than welcome pullback. You don't like to see it so aggressive, but look what happens over the next few days. There'll be this chop, right? So you guys will go home, you'll make decisions, other traders will make decisions, and the market will sort of bounce around trying to digest that a little bit. In the Dow here today, like I said, it was the first to come down, or came down to this first support area here today. Apple was your leader. Sadly, it didn't hold on to that. Apple's earnings gave it a good start and fresh new highs here today, but in the afternoon, everything pretty much got pulled back there. Really, everything in the Dow was pulled back today. I think maybe Pfizer, did it happen to finish positive by just a fraction of a percent? You can see up here. We're looking in the dojo here. If you're one of our customers, you can come on over and pull this up if you want to play along. But otherwise, everything in the Dow was pretty much negative on the day. In the NASDAQ, you got Amgen. Sticks out as a strong one today. We pointed this out yesterday. They were, it's the second quarter in a row that they beat the highest analyst estimates in terms of earnings and revenue. So really good there. I mean, it was just a perfect earnings announcement on their part. You got Electronic Arts, used to be called EA Sports, up 4.5% on the day. So that was one that stuck out. That was also earnings related there. We talked about that yesterday. AMD was a drag. You got about a 10% decline. A real drag on the semiconductor sector. It was a bad day for AMD to actually have not the greatest of earnings because the sector as a whole saw a pullback today. If you want to look at the SMH, it was a worst day in over 2 months here for the SMH. Not a horrible deal, right? The fact that it's pulled back like that, given the run that it's had. Same comments for the stock market. Even though the markets are up near highs, the fact that it pulled back, not really such a big deal. And if you look through the semiconductors, pretty much everything was weak today. If you look at Texas Instruments, 2.75% to the downside. Taiwan Semiconductors lost about 1%. You can go through some of these if you like the sector. I don't need to go through all of them for you. But you could just see a broad-based sort of sell-off in the sector there. So overall, you understand why there was some pressure there to the broad markets. I will point out financials. Financials held their own today. Only lost about 0.5% on the day. Was green almost until the very, very end of the day. Financials really not budging too much on the Fed rate announcement, and like I said, kind of holding their own, even though it was down a little bit today. If that continues and the semiconductors continue a little bit weak to the downside, you could certainly understand if there was a pullback, although that's good relative strength there in the financials if you're paying attention to what's going on. Also some good relative strength in the Russell 2000, not really like a lot, but the fact that the markets were down today, you give it a pass. The fact that it lost less than the markets today and there was buying off of those lows again. If you happen to really zoom in on this here, can I go a little further? Yeah, there we go. If you really zoom in, you can see the same buying in the same area. So day by day, whoever it is, the buyers, the people moving money back into this space, hey, that's not bad, you know? That's looking pretty good there. So if you're a fan of the Russell, you're like, all right, cool, you know, a little bit of relative strength there. In the S&P 500, you got Nordstrom, symbol JWN. We'll zoom back out here. Up 8%. It was up over 10% earlier on the day. There is talks that the family, the family that owns, well, a third of Nordstrom at the moment, they're going to try to get back over 50%. They like it, right, because the stock's discounted. So that the Nordstrom family clearly discount hunters. They like that their stock is discounted. Problem is they don't have enough money to buy themselves back to 50%. So the reason the stock is higher today is because a lot of people think that they're going to push for a share buyback. If they could do a share buyback, that gets them closer. Then they can go ahead and buy the rest of the shares, maybe sneak in and grab some on the buyback. The reason people like that, right? Shares always move higher on buyback news. So pretty cool on that one there. Who else was a buyback today? Was it UNH? I had it there somewhere. Let's see. Was it UNH? Someone can help me out on that one. I believe it was UNH. I don't know. Somebody bought back another $1 billion worth of shares. I thought I put it down. Maybe I'll get to it here through all the notes. All right, let's move on to oil. Whoops. So you got oil, stronger day here, just kind of carrying over from yesterday. It fell a little bit there in the very late day there. But oil service stocks, the oil stocks that did well yesterday, a lot of them did really well today, just continuing higher because of that report that sort of somehow got snuck out a little bit early. If you look at oil inventory numbers, there was a draw of 8.5 million barrels week over week, which is good for supporting the price of oil. But a lot of people sort of saw that yesterday, and because of that, you know, Still got that going on from yesterday. You got the dollar moving to highs here today, closing near lows, which means you got gold pushing near lows, the dollar pushing near highs on the Fed announcement there. Very wild and sort of whippy there as the day got going on. We already talked about Apple. They reported earnings, beat on revenue. Their services income now accounts for 21.3% of their revenue. So very steady growth there. If you look at a chart of their services business, very, very steady. That's why everybody keeps focusing on that one there. And then I'll point out Bungie. If you guys happen to look at this, this is tied to Beyond Meats here. They reported earnings. They beat by a mile, $1.52 by 34 cents. It was expected there. $135 million came from the gains on their investment in Beyond Meats, right? So you can kind of understand that because Beyond Meat's very, very much a good performer there. So that's that one. And I don't know if I shared this with you yesterday. There was a report or a study that 28% of all food delivery drivers that work for those big three food delivery driving companies, you know, the apps where they pick up your Chipotle and bring it to you, 28% of them admitted to snacking on your food. Gross, man. Right? 28% of those people snacking on your food. Grubhub lower, lower yesterday and lower today. I don't know if it's all on that news, but you know, it's still sort of creepy, right? Like, whoa. All right, also in news after hours here, you got Fitbit missing by a mile, missed on earnings, missed on revenue, missed on guidance. Nothing really good to say there. That's horrible. QCOM also reporting earnings. They beat on earnings, a little bit light on revenue, thanks to the chip division. If you look in I'll zoom out here. If you break it down in their chip division, stock a little bit lower. Last I checked, it was around 70. I forgot to pull this up. I'm sorry. 69.50-ish, so that's going to put it down here tomorrow, at least as of now. Gap lower here, down about 69.50 because of the earnings there. And Lam Research in the chip space, reporting earnings pretty much just flat. Like, it wasn't amazing. Earnings were basically as expected. Revenue was basically as expected. Guidance was pretty much as everybody was expecting. The stock's down 2%. Not really a big move. There may be something going on any conference call if you're paying attention to that. That's moving it a little bit lower, but initially it really wasn't all that exciting. You had 31 new 52-week highs today. Union Pacific stuck out as one. Now, a lot of the 52-week highs today, they hit highs and then they closed near lows as you had the Fed announcement there. But Union Pacific closing near highs, that's one of the rail stocks. We've kind of focused on them a lot lately. And then Utilities stands out as an area here. EIX is one of your breakouts for the day. This is in the utility space. We talked about NiSource yesterday, NI as being one that's breaking out there. Still working on it. It was a positive day for it. And ONEOK, I think that's how you say it. ONEOK, very strong day there on earnings, and of course, poked to 52-week highs by like a penny and a half. I mean, just really tough there. And also Moody's. If you like Moody's, they got up to new highs there too. Very strong stock, by the way. New lows today. You still have Cabot Oil, although Cabot Oil did try to come off the lows for a brief minute. Couldn't get it done. Still very much weak in the short term. And then you have Molson Coors. That was earnings related for them. Not really great on earnings. Stock broke to new 52-week lows there. I will point out, let's do some stats here. You got Dish Networks. So Dish Networks is now down 25% from the highs here. When Dish Networks finds a move of 25%, there's an 88% chance of at least a 6% rally over the next week. 6% puts you probably back towards the, 36-ish? It's not a very big bounce, but I just thought that was interesting. 88% chance of at least a 6% rally over the next week. So we'll track it and see what happens there. 82% of the time, the stock is higher than the lowest point of its 25% decline 1 month later. So seems to be kind of a bullish thing. Not really something I can advise you on, but I just thought that was kind of interesting. Twitter there, higher on the day, about 3%, breaking to new highs. Not really extended or anything, just kind of continuing from that earnings gap. Just people starting to come around in a bigger way for Twitter. It's been a struggle for them. Humana in the healthcare space making some new highs there. Very nice. Earnings related, 4%. What else do we have? We covered AMD already. Spotify essentially flat. They reported earnings here today. Started lower, but I mean, that's a choppy stock. If you look at this, what a mess. Very, very tough one to trade there if you're an active trader, but Anyways, that's that one. Beyond Meats gained about 1% back on the day. General Electric was in there, lost essentially 0.5%. And yeah, that's pretty much all I have. So tomorrow you have earnings from Archer Daniels, symbols ADM, Dow DuPont, General Motors, Kellogg's. Hey. Verizon coming out tomorrow in the morning. And then after hours, you really have Hartford Insurance and United States Steel coming out, expecting 39 cents a share. Signet paying out 37 cents a share. Pfizer paying out 36 cents a share. And JB Hunt paying out 26 cents a share. Almost all of them we own here at Jazz Wealth in our funds. I'll take a look here. I didn't get a chance to look at Garmin. They reported earnings. Oh, that's horrible. So the stock ended up only up about 2% for the day. It did start a little bit higher. I'll take your questions if you have any, and then we've put a busy week behind us. I believe tomorrow is actually the busiest day of earnings. So we're past the halfway mark, but I believe we have, in addition to all of this, the number of stocks in general, not the number of S&P stocks. That was last week. You sold? Oh, you owned One Oak. Oh, okay. Well, hey, it happens. You took a shot there. You just missed the earnings. Could have easily went the other way. Earnings are difficult, so I wouldn't kick yourself there. Yeah. Honda back to 52-week lows there. I saw the excitement coming away from Honda because of Chrysler. That was only up about 2% today, but they apparently the Dodge Ram is a big seller. That was their reasoning behind it. I don't really know. We live in Florida. Like, if you have a Dodge Ram, you better have a boat. Otherwise, everybody's making fun of you. Anything on SkyWest earnings today? Nope, I didn't pull that one up. Was that today? Was it today? I don't know. I'll look briefly here. Did it come out today? $1.71. So earnings came out $1.66. I'm sorry, $1.71 versus $1.66 expected. Let's see. Yeah, son of a gun. Yeah, pretty much a mess still stuck in there, though. I don't have any real great news for you to offer there. I didn't look at this one. I don't know why it's not on my list. Usually they're all on there, but not a lot to report there. Where do you find stats like the ones, the probability of recovery in Dish? We spend our money on data. So as much as we can grab and suck up, we'll use, and then use it to make the videos and use it to sort of do everything. And in this dojo here, this is eventually going to offer that to everybody. We are working on, and this is going to be a long time down the road, but we like the idea of letting people be able to go in and do that themselves, right? So we like the idea of them being able to go in and say, all right, I have these stats that I want to find on a particular stock, and then they could just pull it up. It's an obscene amount of data. Yep. Yep, I commented on the Trump tweet there about him letting us down, and yeah, I think it was sort of unfortunate, I think, what happened today with the way that comment was going on there. Any thought on marijuana stock sell-offs like CGC? Overvalued and overpriced. They still are overvalued and overpriced. It's just that simple. People fell for the hype. It got very exciting there, and people then realized, wait a minute, this is a commodity. It's not technically worth all of that. At one point, we made a big deal out of that, but yeah, overpriced, overvalued still. You're betting on sort of all that continuing, and it's not, right? Cool. Belgian audience, that's awesome. Do you think a $15 fee per transaction on your investment platform is a lot? I'll buy 3 shares, $5. No, $15 is a lot, a real lot. It's I don't know if you're trading CFDs over there. I'm not sure how you're actually trading our markets. That CFD market is kind of the Wild West still, really, but no, you shouldn't. You don't have to pay that much. I know many international traders in Israel and Singapore, they don't pay that. So I would do a little research. If you're trying to trade the U.S. markets, if you're talking about other markets, I can't say. I wouldn't know. Nice. All right, well, I'm going to wrap it up there. Happy Fed Day, everybody. It's done. It's over with. We'll be back to focusing on earnings and all that other good stuff tomorrow. And, you can go rest a little bit. We'll see you tomorrow. Enjoy the rest of your day, and thank you so much for watching. Thanks for subscribing. Those of you that have, that's seems like quite an accomplishment. I love it. Enjoy.
Hey, wait! Before you go watch one of our other great videos, have you had a chance to see our new Fin Tips videos? They focus on one topic at a time, covering investing, personal finance, and anything that can quickly help you with your dough. Best of all, we'll keep it real short, because we know time is money.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.